Well, ladies and gentlemen, we absolutely have a mess on our hands. That part is clear. What do we do about it? That part, not so clear. I'm going to give some analysis in this video, and also I'm going to provide some technicals as well, some things that you might find enlightening and hopefully some entertainment along with it. And if you guys want to see more of my analyses, my technicals, I'll tell you later about the link down in the description for the Discord where you can save 50%. I think today is the last day using code word cash on your first month's membership when you come on over and join the thousands of members that are already over there. In the meantime, I do want to get over into the news, into the charts that we have waiting for us today. So let's go ahead and do that. So the first thing that I want to pop up here and share with you is some of the things that we have coming up this week. And when we look, we have some Fed speech to start today, not too bad. Scrolling down into Wednesday, 2 p.m., we have the Fed minutes, and that's the first thing that we want to pay attention to see what exactly the Fed is saying, what they were thinking before all this tariff stuff hit, and what exactly they were talking about, see if there's any sort of signaling in there. Hopefully maybe a sign of some dovishness, but even if not, I think they're going to find it hard to maintain their tune right now where they're not going to talk about more cuts. I'm going to show the bond market's anticipation of the federal funds rate by the end of 2025 in this video as well. Moving over into Thursday, inflation rates, we want to watch those. And let's see, the forecast right now from Trading Economics is over here. The consensus estimate, 0.3%, 3%, 2.2%, 2.6%. So looking to be up a little bit when we look at I'll zoom back out here, the core number that we have from the previous month. And then when we look at the inflation rate year over year with food and energy mixed into it, looking to be down a little bit, year over year number down a little bit. Honestly, I think we're going to surprise to the upside on those, given all the pull forward that we've had with the prices in anticipation of what we could see happening with the tariffs. So I think that pull forward, remember all of this data that we get for CPI is March's data. This is before the Liberation Day that we had on April the 2nd, at least according to Trump with the tariff announcement that we've had. And you can actually see if you go and look at January and February's orders, they were actually well increased, spiked well above what we had months leading up to that. So I do think that we could potentially go to the upside on inflation. That could be some further downward pressure on the markets if it can take any more. Anyway, so moving on from there into what we see happening. That's on Thursday, by the way, April the 10th. Moving into Friday, we have PPI, so the producer prices that we're looking at. And that, once again, can tell us a story where it could surprise to the upside. And it looks like consensus is actually showing us up a little bit from the previous month. And then the big thing, I think this is going to be huge, Michigan consumer sentiment. I think that this is going to be a mega catalyst for us to watch and see what exactly sentiment has to say. Economic conditions are probably going to fall through the floor as we go ahead and we gather that data. I believe that that's fairly up-to-date data when they announced those early numbers, those preliminary numbers on the 11th of April, and then it's the last Friday of the month that we get the rest of those numbers coming out for us. So that would be all the way, I believe would be the 25th would be the last one. There it is, the final numbers for Michigan consumer sentiment. So this week we have those inflation numbers coming for us, and then consumer sentiment, and also Fed minutes, but consumer sentiment I think is going to be the really big one. We look at the year ahead inflation, long-term inflation, and we also look at economic conditions. I think that they're going to tell a pretty nasty story for us, and we want to pay attention to that story because that can tell us exactly what to expect for the market. Now, mind you, this week we could see that bottoming effect take place. Maybe we see that bounce take place. I was kind of hopeful that we get that bounce, but now we're hearing about China possibly retaliating in their own way, doing maybe a little bit of posturing as well, and that further rattlesome to the markets. And wait until I show you the charts on the 10-year Treasury yield and the 20-year Treasury yield and show you what they've been signaling and where they could potentially go. And I will also show you TLT's chart and also show you TMF because I think that those are big plays that I think could still play out really well for us. Now, moving over to the federal funds rate, we're looking at December of 25. The peak that we have right now is 3.25 to 3.5% for that federal funds rate. That's another 25 basis points down from the peak that we had a month ago. And if we actually look at the shift, from the current rate that we have, nearly no chance either from 4 to 4.25, 2.8%. Whereas if we go back just 1 week, we had a 25% chance of only having two 25 basis point cuts, and that's now been shifted. You don't get that percentage. You get closer to it when you shift up to 3, but even more so when you shift up to 4. So between 3 and 4 seems to be where you actually start to get into those solid probabilities. These two bars that you see right here, and we're coming very close to getting down to that 3% to 3.25%. So that the bond market anticipating further Fed rate cuts than what was previously anticipated. And what I said when these numbers came out in December from the SEP, I said, I don't really see the Fed holding on to things that tight. I think the wheels are going to come off before then. Certainly what we have right now with the whole tariff drama taking place in the markets is some of that coming through for us right now. You know, the consumer's under stress. Well, this puts further stress on the consumer. It furthers that narrative, and then it has its effects on the markets. So let's move over from there into the charts on this stuff. And I'm going to kick things off with the US 10-year Treasury yield. So coming up on screen for you right now, this is US 10Y on Trading Economics. If you want to see it, check out the head and shoulders that we had on the daily chart. This shoulder started all the way back in October of 2024, and that shoulder formed by December. Then the head of this thing went from December until March. So you had that peak right in between, right at the peak of January, if you will. And then where did we fall down through? Well, look, we actually have that other shoulder, that right shoulder coming in, and we touched down on Wednesday on the April the 2nd, kind of anticipating riding that roller coaster, setting ourselves on the cusp, ready to go either way. Tariff news, not so bad. We bounce, and then we refute the head and shoulders. Instead, we've come down and we've confirmed it so far. And where do we see this candle building up today? Today, we're actually at the 23.6 on a retracement, a Fibonacci retracement that goes all the way from the early 1980s peak and down until the bottom that we had. Let me actually go to the monthly chart and I'll show you where that bottom is, and then we'll provide further commentary here. That bottom happened to be well, the 2nd of March of 2020, that month, I should say, since this is the monthly chart that we're looking at. March of 2020 is where that bottom happened, and then we've been on a steady climb since that time. We've reached the 23.6, and we've been oscillating around it. And then going back down to the daily chart, we're going to watch and see. So far, we're getting a rejection today. This head and shoulders indicates that we could see a 10-year Treasury yield, if I move this down here, of about 3.4%. So that would be an incredible drop, which could mean good news for the treasuries, for the bonds. When those yields come down, that means that they have to do less incentivizing to make those bonds attractive enough for purchase. So these yields do move inverse to the bond prices. So if we go to the 20-year, what does that look like? Let's zoom in there a little bit for you. This one has a little bit of a slant to the neckline for the head and shoulders, and that one is pointing for us down all the way down to about 3.86%. You're taking on longer term risk, so there should be a little bit more reward involved with it. And that coincides, that actually takes us down below the September peak that we have. And what does that translate into for TLT prices? Well, if we go to TLT and go back to that peak in September, that puts us around $100 per share of TLT, which happens to be this inverse head and shoulders that we have here. The price target that would have, it coincides at $101.57. So pretty neat to see that come together. And it does make sense with that this would be inverse to what we saw with the yields, because that's the way that they're supposed to move. Inverse head and shoulders, absolutely. And if I go out a little bit more, the descending wedge pattern that we've been in as well, where we were able to tumble outside of it a little bit as we got into a bit of the mess that we had through October, where we thought that we had runaway debt. Now, mind you, that could still be the case. Maybe that's causing us a little bit of subdued movement, if you will. And then we also had that peak going up in September when we thought that we were going into recession. Well, here we are again. A lot of talk about recession, that we could potentially get pushed that way, exacerbated by the tariffs. Well, does that take us back up to that 100? Honestly, I think that it has a high potential to do so. And because of that, that's why I remain bullish on TMF. That could show us potentially, if we have that same movement but outsized by TMF in short order, up to about $61 per share, which from where we're at right now in the pre-market would be about 30% up from its current or from its closing price or pre-market price, whatever you want to talk about, because they're both very similar. The closing price from Friday is about the pre-market price from where we're at right now. There's about a 32-cent difference. So that 30% movement, absolutely huge. And if you are not a risk-averse person, or if you like risk and you like to be a stock market cowboy, you can put on your belt buckle, put on your cowboy boots, and your hat, and hop into that rodeo, if you will, and take that ride. It is something that could certainly, absolutely pay off in outsized ways, but that's always balanced with outsized risk as well. Just to talk just a little bit about the pre-market that we're seeing now, that it's not just futures, but that the future is here, and we're actually seeing some of that low trading in the pre-market hours, where do we find ourselves? Well, over here, let me go back a little bit more. We'll actually go out to the monthly chart and we'll see what that looks like. There we go. We'll get a much better view of this with the monthly chart. So in the pre-market hours, we're still well above that January 2022 peak for SPY. But if we were to go ahead and look, where's that peak at? That peak happens to be, I'll put my cursor on it, about 480 is that number. And did we touch that? If we go back down to the daily, as a matter of fact, we're going to go down to the 1 hour chart on this and we'll see where that bottom was. That bottom happened to be at about 482, and our 0.5 Fibonacci retracement that I have on here, Fibonacci extension also happens to be right at about 480. So we're reaching prime area for bounce zone. If we open and come down to that 480 number, watch for a big bounce to happen at that point in time. So for day traders, be ready. Have your technical set up. I'm sure if you are a day trader, you already do. But I do think that there's a potential that we see that during the regular trading hours today. There is significant resistance up around 510 to 513. So we want to watch that as well. And just look at that nasty straight sell that we've seen. This is the first big green that we have, and it's still gapped down from what we had to close the market last week. So into the Qs, and once again, this one goes back to the November monthly chart, and we'll take down the technical so it's not so messy here. Where do we find ourselves? Here's the November 2021 peak. And in the pre-market, we're still up above that. I said this is where we could find a big bounce coming in for us. Maybe we see it, maybe we don't. And in the pre-market hours, we really did come down to about that level. So that level on here, about 400 even. And if we go back and look to see where that was on November 2021, that peak happened to be at 408. So we actually penetrated down through a little bit more to, let me see, more closer to the top of this candle that we have. So the futures that I showed in last night's video, you can also see those sort of echoing here. And the first view that I had of IWM, by the way, when I pulled it up at first this morning, I couldn't even see the pre-market. I could see the bottom of this of our close that we had from Friday, but I could not see where that was. And that happens to be right around the 1 on the Fibonacci extension from this peak that we had back here at the beginning of February down to this low. We've almost had that same movement so far in the pre-market hours. We'll see if we get that. And that is down near Friday's low as well. And that puts us into this chop that we have. And something I want to keep on sharing with you is this view of IWM, because when you look at this view, you can see we spend very little time living up above this for the Russell 2000 stocks. The yellow, we spend a little bit of time there as well. Most of the time is spent between white and yellow. And then above the green is absolutely where we live. So we visit down below the green. So that's what I'm looking at right now, what I'm dollar cost averaging into with some of the Russell 2000. A little bit slowly at first. We don't know how far this mess is going to go, but I would like some exposure now that we're starting to get down below the green, because you can see going all the way back to March of 2009 is where this green line starts off. And then over time, you can see that taking place, going through every dip and dive that we have during that time. And this is another one of those times that even if we have another COVID type moment down below the green, we usually tend to rip back up above that. Easy monetary policy is certainly going to help along the way. Guys, I do share these technicals over at the Discord. That link is down in the description. Code word cash has mere hours left on it, so make sure that you click on that soon. Join me and the other panel experts over there and the thousands of members that we support, along with the products and services that you find there as well, including the bread bot, which can signal things like when we get those massive sells or those massive buy times coming in. It doesn't tell you when to buy or sell, but it does tell you when those movements could potentially be coming. And I'll tell you what, it is one of the cleanest, least noisy signals that I've ever found, or I should say trading strategies that I've ever used. And I use it myself all the time. And I'll tell you what, it keeps on working again and again and again. While there is no perfect one, that one is probably the closest that I've ever seen. And then there's also AI tools over there, advanced charting software, you name it. The products and services are just endless when you go and you look and you see, when you click on the earner tier and you just scroll down through and you just scrolling at everything that it has to offer, guys. And here on YouTube, I bring you stuff as close as I can to real time, but over there it's even closer to real time. The panel experts also do an excellent job as well, bringing you what they see in their respective parts of the markets that they do, whether it happens to be stocks, bonds, crypto, you name it. Over there, we're talking all about it and all the time, and so is the community over there, and it's just the best community that I've ever had a chance to be a part of, and to find it in a Discord regarding finance is absolutely incredible. And guys, there's also coursework if you want to learn about technical analysis yourself, if you want to learn about how to trade using technicals, if you want to learn about how to trade options, there's some coursework for that down in the description. You click on that, sign up using the code word doctor. That one doesn't expire so quickly, but I will tell you, if you bundle the courses, you save a ton, and if you use the code word doctor when you do sign up, that's going to save you even more. Guys, I really appreciate you watching. Let me know what you think about the markets, about the things that we're seeing, about the bond market. Do you think it's about to take off? Is it the stock market? Is it going to drop a lot further? Are we going to see that bounce off the November 21 highs for the Qs, or the January 2022 highs for SPY? Is the pain train still going to keep on rolling throughout the entire week? When is that moment of reprieve coming? If I had to weigh in on this at all, I would say Michigan consumer sentiment could potentially mark one of those also near-term bottoms. If we don't already have it from last week, maybe this week we finish digesting it. And I do think that bounce is coming. I don't know if it would be the ultimate bottom that we have. You should go back and watch my video that I have on the Qs tracking the NASDAQ 100 and the different retracements that we saw from October of 2002 to the peak before a major sell. And I'll tell you what, the Great Recession brought us down a ton, like a 75-ish, 78, more like 78% retracement that we had before skyrocketing off of that. Everything after that did much less. So we'll see what this does. Does it take us to the 23.6, the 38.2? Go watch that video, see where those numbers are. Subscribe to the channel so you guys can see when I have more of these things come out. And again, support the channel by using the links. Support yourself by using those links down in the description. Guys, make sure that you use those code words to get a further discount on an already incredible deal. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.